This is not financial advice. I'm documenting my thoughts about Amazon. Its stock is currently trading at about $118 with a market cap of about $1.2 trillion. When I look into the revenue in the past 12 months, it's about $470 billion, which represents a price to sales of under 3, which is good. But we cannot just see the price to sales in isolation. We have to look at the earnings too. The earnings are about $20 billion, which represents a price to earnings of about 60, which is really expensive. But a lot of people are paying this premium because they think Amazon is investing in itself a lot, and over a period of time, they will generate huge profits. When we look into Amazon's business in 2021, they made about $470 billion of revenue, out of which $400 billion are from the e-commerce business and $70 billion is from Amazon Web Services. Out of this $400 billion of revenue in the e-commerce, $280 billion came from the US retail, which is profitable but in a single digit. But rest of the $120 billion which came from international retail is actually making loss. So they're not making money on this $120 billion, and we don't know when they will make positive net income in this. But the e-commerce business is very, very tricky because the wages are increasing, gas prices are increasing, transportation costs are increasing, supply chain is tight. But the e-commerce businesses, they cannot pass on this cost to the end user because of competition. So they have to incur losses or very low net profit margins. I want to evaluate this company in 2025 and predict its stock price so I can determine if the current price is a good entry point. So for my evaluation, I'm treating AWS and retail separately because they are two different businesses growing at two different paces and have different profit margins. So I will start with AWS first. They made about $70 billion of revenue in 2021 from AWS, and AWS is growing at about 35% plus growth rate. But in the next 4 years, I'm going to assume it'll grow at about 30%. It'll make about $200 billion of revenue in 2025. AWS is a very profitable business with margins north of 30%. So I'm going to assume the same 30%, which will result in a $60 billion of net income. For a business that's growing at more than 30% year on year and have net profit margins of 30% or more, I can pay a multiple of 30. But I'm only going to assume 25 multiple on this, which will result in $1.5 trillion of market cap just for AWS. So now that we are done with AWS, valuing it at 1.5 trillion, let's move on to the retail business. When looking at retail in isolation, they're making single-digit margins now on US retail and losing money on international retail, right? But they're growing in low double-digit rate. So I'm going to assume 10% growth in the next 4 years. They will make about $600 billion of revenue in 2025. Retail is a very low margin business, so I'm assuming that they will get profitable in both US retail and international business. Retail is a very low margin business, so I'm going to assume about 10% net profit margins for both US and retail operations in 2025, which will result in a $60 billion of net income. For a business that's growing in low double digits and have 10% net profit margins, I cannot pay more than a 15 multiple. So I'm going to put a 15 multiple on this business, which will value it at $900 billion in 2025. When I put these two evaluations together, Amazon will have a $2.4 trillion of market cap in 2025. So that'll result in a stock price of about $240, which is a 2x in 4 years. So I'm a buyer of Amazon at this price.